Better than expected UK manufacturing PMIs at 49.1 for November, but still below the 50 mark, where it's been stuck since April. Let's get straight to market. Senior economist Rob Dobson. Good to see you again, Rob. Look, on the face of it, pretty good news for Osborne, but there are some lurking problems here, it seems.
Well, that's the case. These figures are better than expected. They're good, but they're not great. What they're suggesting is UK manufacturing is stabilising. That's positive in itself, but we're still seeing companies reporting that new order inflows are pretty weak. Export orders are still falling, which suggests that rebalancing still hasn't occurred, and job losses, they were occurring at an accelerated pace. So again, there's also some bad news in that data as well.
And growth, when you look across these sectors, growth does appear to be very, very uneven. How much of a worry is that?
Well, what we like is we like things to be broad-based across the sector. That means that we're not skewed towards one particular area, and means that we're not dependent on one area. Now, consumer goods producers, they reported very strong growth this month, whereas intermediate investment goods producers, they reported that they were still seeing output fall. This suggests that we're still very reliant on consumption and not so much on investment spending at the moment.
Can Osborne keep defending his austerity plans in light of this?
Well, the austerity plans are very much focused towards reducing that debt ratio. And so I think he will continue to focus on that, keep the markets confident in doing that. But again, I suppose the silver bullet in all these things is always growth. We need growth in order to make those ratios improve. And until we get that growth, it's always going to be a struggle.
Where is it going to come from when it comes?
Well, hopefully it will come from manufacturing. Yeah, the talk about rebalancing, the talk about going into more export and producing more is a good thing. And maybe we can get some of that, but also maybe where government spending could be targeted more on long-term growth prospects, things such as infrastructure and that type of investment spending, and that would benefit those investment goods producers as well.
You know, it's interesting. We talk to the employment minister every month, of course, when the numbers come out. Your report shows job losses accelerating. Mm-hmm. It seems on a national level, it seems a very mixed picture when we speak to government about this.
Yeah, and the UK labour market has held up pretty well post financial crisis and continue to do so. But what we're seeing now is we're seeing companies with a more cost-cautious outlook, particularly in manufacturing, and therefore they're tweaking their employment levels to reflect this. And until demand improves significantly, they'll continue to maintain on that cost-cautious footing.
Services Wednesday. I know you can't say much about that, but given this as a backdrop, what can the market expect?
Well, naturally, I can't give any handle on that. But what this data is very much showing from the manufacturing side is manufacturing is not going to be a pillar for GDP growth in Q4, and therefore we'll wait to see what the service numbers do, but manufacturing is not going to assist in that basis.
Rob, many thanks for that. Rob Dobson from Market. Right, to our chart of the day, the FTSE 350 mining index rising to almost a one-month high, getting a lift after shares in commodities companies rose on improving manufacturing data out of China. But, and this is a but, the index still down almost 6% for the year, as you can see from that chart there. On this day, 20 years ago, the first text was sent to a mobile phone by an engineer named Neil Papworth. Imbued with a festive spirit, he texted Merry Christmas to an Orbitel 901 phone. Little did he know that 2 decades later, trillions of texts are now sent across the world, generating billions of pounds in revenue. That is it. My thanks to Rob Dobson from Market. That was Market Pulse. I'm Axel Threlfall. This is Reuters.